Alrighty, so this was a trade that I took Thursday night, and as you can see, the entry was pretty on point, got a sniper entry, and you can see I went ahead and I maximized this whole move for roughly about 100 and something pips. You see as I hit my take profit right up here for 112 pips exactly. And in this video today, in order to get entries like this, we're gonna talk about time frame analysis, aka top-down analysis. I made a whopping 5K off this move. You can see I scaled in a couple positions here. This is my live account that I've been trading with on Sway. And you can see I maximized this move and went ahead and took 5K profits. Now, in order to go ahead and get the best entry in these markets, so that way you can be as profitable just like me, you gotta be able to make use of multiple time frames and using them to understand the story of the markets to get that most precise entry. In this lesson, I'm gonna go ahead and teach you everything you need to know about top-down analysis so that way you can be profitable in the market. Let's jump right into it. Now, getting sniper entries is gonna change your whole process. You can see I maximized this move for about 112 pips, but that wasn't the only move I caught. I went and cut and caught this one for 83, 81 pips, this one for 97, and this one for 283. So you can see from Monday, Tuesday, Wednesday, and finally Thursday. Now, in this video, we're gonna cover the following. What is top-down analysis? Why do we look at multiple time frames instead of just one? How to trade these multiple time frames, and most importantly, my high win probability setup for top-down analysis. And in order to get sniper entries like this, or this, you gotta be able to use top-down analysis so you could enter the markets. But the goal is to enter so that we can have a small stop loss and a big reward, just like I did. You can see on average, I averaged around 16 pip stop losses. It's only in certain instances that my stop loss is bigger. And in this video, that's the goal, so that you get small risk, big reward setups. So the question that you've all been waiting for, what is top-down analysis? Top-down analysis is basically analyzing charts from the higher time frame and narrowing it down to a smaller time frame so that way you know where you are within the market. Keep in mind, the goal is always to use the bigger picture so that way you can catch the trend, so that way you can go from the trend to your analyzing time frame to your entry time frame. Don't worry, in a few seconds it's all gonna make sense. A lot of people also ask me, is there one time frame that I can use that will give me the sauce to conquer the markets? The answer is no. There's not one single time frame. Again, you got to learn how to use multiple time frames in order to kind of understand this, so that way you can get these sniper entries that we're looking for. Just keep in mind, when you use top-down analysis, you're making use of the context of the candles in order to tell the story on where you are within the market, so that way you can get in safely and exit the market safely. That's the whole goal of top-down analysis, to enter with the trend and flow with it and exit the market when you hit your goal. Again, keep in mind the goal is to start from your higher time frame, which is gonna tell you the overall trend. Then you're gonna get to your analyzing time frames to where you could see where you are within the move. And then you're going to get to your entry time frame. This is where all the magic happens. On the left, we have GBP, JPY, aka GBay, on the 1 hour time frame. And on the right, we have GJ on the 3-minute time frame. Now, I want you to notice this, right? Based on structure and on the trend, this was the last market structure lower high to the left right here. Now, notice, even if we would have waited and entered at this candle closure right around here, where we got this bullish engulfing candlestick pattern, we would have entered at 193.405, and we would have to have a stop loss at the swing low of 192.887, which is a 52 pip stop loss. And then you would have to wait. Then we broke structure and we would have maximized the move for 106 pips. Now, on the 3-minute time frame, you can see structure. Now, this was the major market structure lower high that needed to be broken right here. You can see the trend clearly where price is maintaining lower highs, and then price broke above, retested where we got the sniper entry. We put our stop loss below this area right here due to the simple fact we have a QP and we're underneath the market structure area, and you have a better risk to reward. And now notice on the left side, you have a risk to reward of 2.0, and on the right side, you have a risk to reward of 7. Now, on the right side, this is why we want the sniper entry, so we can get in the good entry, the small stop loss, and the big gains. This is what it's all about. This is why you want to use multiple time frames instead of just using one. You want that sniper entry. Now, after that, if you still don't understand the importance of top-down analysis, Don't worry, I'm about to blow your mind even more. Stay tuned. And it's just like, I actually have 3 reasons why you actually want to use top-down analysis to get a better understanding. The first one is number 1, you want to get a clearer picture of the overall trend. Let's jump back into the charts. Let me show you an example real quick. You want to be able to gain a clearer picture of the overall trend. Now, right here, I'm on the 15-minute on GJ, and as you can see, the trend is showing that we are creating lower highs and lower lows. Notice the downtrend continuance, right? Notice as we look like as we're trending downwards. Cool. And here you can see again that lower highs and lower lows on this particular time frame is being maintained. Now, if we spoke up to a higher time frame like the 1 hour and we look for our drawing perspective, you would have saw that overall, right? We were in a short-term downside trend, but then we turned around, right? So then your selling would have lasted as long. Let's go up a little bit more higher. Let's go to the 3 hour. You look overall, well, now it looks like, looks like it was a short-term sell, long-term buy, right? This is the 3 hour. Lower highs are still being maintained, but notice that we went bullish right after. Let's go to the 5 hour. Now, on this time frame, it's starting to look like, well, damn, maybe overall we were in an uptrend. Maybe I shouldn't have been selling. Maybe the sell was the counter trend trade. Go up to the 8 hour. Okay, now it's starting to look a little bit more clear. We're definitely bullish. Go up to the 11 hour. Definitely bullish. Go up to the daily. Oh man, we've been in the uptrend this whole time. Notice how higher highs and higher lows are being maintained. And again, this is why you want to use multiple time frames, because one time frame may be telling you something, but the higher time frame may be protecting you from the overall bias, which in this case would be bullish. And again, this is why it's so important to trade with the trend. You would have been taking a sell and the overall trend is buys. Remember, the lower time frames are used for entries. Then you have your analyzing time frames to see where you are within the move. Then you have your bigger picture time frames, which is going to set the tone. And again, I just keep on repeating this because I really want to drill it into your head. When it comes to time frame correlation, you have to separate these things and categorize them so you can have the most success. Real quick, just keep this in mind. If you're only focusing on the lower time frame, keep in mind the trend is going to change on the bigger time frame sooner. So you probably want to look at the higher time frame so you don't get wrecked. That's how you throw away money. And again, this is why for me, why I only focus on time frame correlation. Let's just say you did want to do that magical time frame. Like, for example, this 15-minute time frame and you only wanted to focus on this. You already see it's a downtrend, so cool. Let's say we go ahead and take this setup right here. All right, cool. We went ahead and broke this QP and we kept on following the trend down, lower highs, lower lows is being maintained, right? Here's the thing. When you're not using the higher time frames, you never know when it's going to change structure to abide by the higher time frames. Because you got to remember, you have analyzing time frames and you never know when the trend is going to change. Now, in this example, let's just say we change it to the 1 hour now, and the same sell that we took, we're expecting to be long-term profitable. Well, boom, you would have got stopped out because the trend changed right here because you're not aware of where you are on the higher time frame. So the whole goal in this overall is to, again, get those best entries, but again, to chase the trend of the overall trend, which in this situation, I believe is buys. You should have been waiting for the best buying opportunity because according to the higher time frames, the overall bias is bullish. And this was the actual bullish setup that you need to ride the wave in the direction of trend, which you would have saw here. Now, think about the possibilities on this 15-minute time frame if you did take the buy. Look at that. We would have been so fixated on taking a sell, we wouldn't have even been paying attention to the higher time frame bias. And again, this is why it's important to use time frame correlation so you can avoid simple mistakes like this. All right, so number 2, the goal is always to go ahead and enter the markets and get the best entry for a high probability setup. So on this left-hand side, we'll have the 1 hour time frame. Now, let's say we're following again with structure on the 1 hour time frame. We would have saw that, boom, once we broke this lower high right here, we went ahead and did a market structure retest, critical higher low, which is where you want to enter at. But then, boom, notice this, right? We could have rode the wave a lot more longer and got a lot more pips. Yes, but look at the entry. Entry would have been here. Then we got to actually make our entry to the swing low. Let's just say we do it at a QP just so it don't break. Yeah, trash. No. Now, this is on the right-hand side, this is the 1 hour, but let's actually zoom into the 15-minute. Let me show you something. Now, same area, right? Same area as the left-hand side. Now, this is the lower high that we know that needs to be broken according to the higher time frame. On the 15-minute, you could have been following the bias, lower low, then boom, right around here. This would be considered as a high, and then this would be considered as a low. The market broke that and then came back and retested it. Now, because of this, and you know where you are within structure, you could have entered here, had a better risk to reward, and maximize the same 200 pip move a lot more quicker, and still use the bias to hold the move longer on the higher time frame. So this is why we want to kind of use the lower time frames. Not only do we get that sweet entry, but if we follow the structure accordingly and right and use top-down analysis accordingly, we can get in the market better, get a better entry, get a better risk to reward overall, and have a high probability setup that if you entered on this 15-minute, you could have switched back to the 1 hour and maintained and kind of got a lot more pips, a lot more easier over time with a better stop loss versus having a 163 pip stop loss. You could have had a 43 pip stop loss and still would have been maximizing the move the same way, getting a better risk to reward. So it all comes down to risk to reward. Do you want a 2.3 risk to reward, or do you want that 8.9? I think we all want that 8.9. Don't be scared to put in the work on the lower time frames to get that best entry so you know where you are within these markets. So that way you get that sniper entry. Pow, pow. All right, and lastly, my last reason here is number 3. So let's just say we went ahead and took a sell right around here based on this area of being a supply zone right around here, right? Cool, we have a touch. Cool, we understand the process. We understand what supply zones are supposed to do. We can go ahead and take a short, especially because we have an area of confluence right around here. Cool, take a short. Doesn't even have to be that long. Yeah, cool, right? Now, target, right? We can see structure and everything based on this area of trend, right? Where boom, we went ahead and continued the downtrend structure right around here. Cool, where we maintained lower high and lower lows. And then boom, right? We went ahead and did a transition of trend somewhere like around here. Boom, right? So now you're probably looking at it from the perspective of, oh, cool, we broke this structure right around here. Let me ensure and make sure I take this counter trend trade or this sell, first of all, right? Because I'm in this downtrend market, let me see if I can go ahead and ride it to this wave. So let's see if it goes ahead and plays out. Cool. Boom. Now, what you're noticing right here, boom, right off the back, is that, boom, we rode the wave, right? So the trade would have worked out in our favor. We would have been able to maximize 150 pips. But now what you're beginning to realize is structure is beginning to form right around here. So now you have these areas that are technical, right? Like here, which is most important now. Keep in mind, we broke this and then we broke this one. So now when you're looking back from a retest, right, you have to keep in mind that you don't know which one of these areas are going to be able to retest for the setup from a buy biased, right? So then boom, let's just say we add another thing in here. We add our major QP right around here, solidifying that, hey, this is an area of support. You would have saw that this area was a major area of confluence because, A, we have the zone that we broke, we have a QP, we have everything. So you probably would have been trying to ride the wave back down here to get a retest of this move, when in all reality, you should have been exiting the move for a bigger purpose, right? Because boom, as soon as you did that, the move would have went ahead and turned around, and you only would have been able to check this area of confluence if you knew where you are within a trend. That's for one. But two, being able to draw these areas correctly and make sure that you're able to check out these confluence areas. Because keep in mind, we rejected, we came back down. You probably would have been holding it down here to make sure that we got this retest to continue. You probably would have missed this area completely. Again, resulting in you giving up the profits. So that's why we want to be able to check confluent areas correctly, especially when we're doing our top-down analysis, because it's super important, because that little bit of you trying to hold the move can cause you so much pain and agony. So just remember to check these confluent areas correctly. And just keep in mind, the whole goal with checking confluent areas is instead of having a take profit of right here, you could have had it right here if you would have saw this area in this zone playing out. So again, is it really worth it to kind of, you know what I'm saying, want that extra move? Nah. At the end of the day, if you have these areas marked off accordingly and you know where you are, you can maximize it, even taking a counter trade correctly if you know where you are, catching a high probability setup using the lower time frames. and checking these confluent areas correctly. And remember this one thing and this one thing only. We always got to look left to get right. Again, we always got to look left to get right. If I wasn't able to mark off these areas to my left, I would have never been able to get right and see the bigger picture. Now we're going to kind of get into how to use multiple time frames to do top-down analysis. So you have your higher time frames. These are the time frames that you're going to use to base the trend off of. Then you're going to have your analyzing time frames. These are the time frames that you see where you are within that trend. Then you have your entry time frames. This is where you're lining your shot up to get that sniper entry based on where you are within that analyzing time frame of that move to get the best risk to reward possible. And just keep in mind, when you combine all of this, this is you doing top-down analysis, so that way you can see the trend, you can see where you are within the trend, and then you can get the best entry based on where you are within that trend to ride the wave up. And this is top-down analysis. Now it's time to jump into the meat and potatoes of things. So we're going to go over three things. And in these three things, we're going to cover first the higher time frame. Now, the higher time frame, this is going to predominantly be your monthly, your weekly, and your daily. And what exactly you're doing on this is you're, one, identifying the overall trend. Two, you're finding the major areas of structure using QPs. And then two, you're identifying the most recent areas of structure. Sliding me to the land of the charts, let me show you real quick. So here we go on the monthly time frame. Now, with the monthly time frame, we can clearly see that the overall direction of trend is a uptrend. Notice how the higher time frame is making higher highs and higher lows, right? And structures abiding by this. Also notice that we have these major areas of structure like the 189 of a 180 flat. This is a major area of structure for this overall area that we created this higher low. So we probably want to look for a setup there, right? Most recent, by the way. And then B, if you look right here, again, the 150 area, this is the a major area, a major QP area. And again, this correlates directly to structure. So when you're doing your top-down analysis, this is kind of how it looks like when you want to start from your overall monthly time frame. Let's kind of stretch this out so you can see it a little bigger. Weekly, the data doesn't change too much. You're literally picking up where you left off from the monthly time frame. So ideally, something like this, you're going to kind of continue to just identify just major areas of structure. I like to use the eclipses to do so. You can see I have a higher high here and a higher high here. Now, why I pointed out the higher high? Because 9 times out of 10, where you have a higher high, you'll have a higher low. Now, me looking at these major areas of structure, I know exactly where I can pick off from this daily time frame as far as for structure goes. I know exactly what picture I can look at based on the weekly and what the weekly has set for me. I can see the overall area of trend and where I'm at, and then I can begin to break out my fibs so that way I can see the most recent move. Keep in mind, right, the whole goal of doing this top-down analysis is for you to flow with structure and understand where you are from one time frame to another time frame. So now, in doing so on this time frame, I'm going to go back to identifying these major areas of structure just so I don't get lost in the sauce and I know where I am. You can see me kind of drawing the structure, and you can see that higher highs and higher lows are still being maintained on this overall time frame, which signifies that what? I'm in a bullish structure overall. So which means that my bias should be overall buys. Now, remember the goal on the monthly through the daily, you're identifying the main trend, you're marking off your key areas using QPs, and you're identifying the most recent higher highs and higher lows. Now, the daily is the lowest time frame you're going to go that you're basing your overall trend. These time frames that come after this is where you are within the trend. Let's go back to the land of the charts. Next are going to be your analyzing time frames. This is basically where you are within the move. You're basically picking up from the daily and you're seeing where you are within that bigger picture. Right? We're going to start to literally break it down and see how the move begins to develop and set up. So these are going to be time frames like your 12-hour all the way to your 1 hour. And ideally, what you're doing on this is you're scanning for trade ideals. You are drawing your supply and your demand zones. You're drawing your trend lines. You're drawing your market structure. You're applying more fibs to see where you are within the overall picture. You're applying your QPs, and you're doing slight candlestick analysis. Really on this, you really want to kind of pay attention to, again, where you are within structure. So here we are in the daily time frame, which is our last time frame that we're going to kind of do this overall basing of the trend. So now we're going to kind of replicate this, and now we're going to kind of look at the daily. Right now, from this daily time frame, we're actually going to migrate our way to the 12 hour, right? So again, knowing where you are within structure is kind of key. So again, remember on this daily time frame, what are we going to do? We're going to, again, scan for trade ideas, supply and demand zones, trend lines. So you basically use everything in your arsenal that is technical to aid you in the visual order of you seeing where you are within the move. So what that looks like is right here, exactly at this daily higher high, you're going to draw your supply and your demand zone. You know that once you break this area, you're kind of good to go, right? Also, we're going to draw our supply and our demand zone up here. Keep in mind, I'm still on the daily time frame. I have not yet migrated to the lower time frames, and I'll show you why. We're going to go to the 12 hour. And the reason why I go from daily to 12 hours is because I can't go from 24 hours in a day to just 4 hours. I got to see 12 hours. I got to kind of break it down so that way I can see where I am. Because for me, everything kind of plays a part. Now, on this 12-hour time frame, right, keep in mind that this is my daily area of the higher high. Now, as I go down lower, we have to validate that this area actually broke. This is where, again, the analyzing is going to kind of come into portion, right? So we could probably signify that this is probably a higher low right here, or whatever the case may be in this trend, right? So we could clearly see that we broke all these areas of structure right over here, which means that we could actually start our trend line from right here. This would be our point A of our trend line. Now, we know we need at least 3 touches, so we could either do a trend line from here. Now, because these all areas are all the same, I'm going to just drag it to the left, and boom. Now, I'm also going to go ahead and draw my market structure because I want to be able to analyze this. Keep in mind, I'm doing all this on the 12-hour, and that's just so I can be as valid as a trend as possible. Now, we can see down here that we made some lower lows, right? And then from here, we went ahead and we went back up into an uptrend. We did some form of a retest, and then we went long and maintained. So the whole goal of this, right, is, again, when you're on these lower time frames doing this, these technicalities, you're trying to see, again, where you are within price. So it's clear as day that down here was the higher high, right? But then down here, this was the lower low that was made from structure. And I want you to peep this. We have not come lower than this. So in this overall area, because I know that this is probably the most recent lower high, but it's also the one from a range, I am not okay until we break this structure. So once we break, we do a retest. And this is, again, setting up the trades for the lower time frames so that way we know where we are. Because ideally, if this time frame can break, right? Because ideally, this is the higher low on the bigger picture for the overall turnaround. So if we could spot the counter trend and notice when it ends, we can begin to plot our setup. And that's what we're doing on these analyzing time frames. So notice me as I go lower. And this is just using market structure, zones. I didn't even begin to add QPs into the mix, but if I want to, I can already tell you that right around here at this area that needs to break, it has a quarter point of 162, 250 area, which needs to be broken. So now, boom, we can see that price broke this and then boom, right? So now we're going to look within this for this entry over here because we can already see that the trend has already begun to lift. One thing I also want to notice is right here. Is right here where we broke. Peep that we didn't get a retest. So now we're going to go to the 10 hour. We're going to look at double the amount of data. So now within this condensed area, now we're starting to see the details of the overall trend. We can see that it was this push up, right? And obviously what you're doing on this time frame going so low is, again, you're really going to kind of take this fib and you're really going to kind of dig into the meat and potatoes, right? You can see like a lot of 23.6s. So then we finally get the minor, right? This is the major break of structure. This is the minor break. So now we can see that we pushed up and now we're starting to test these fib levels. And again, this is what we begin to see. Keep in mind, this is the lower low down here. We didn't come lower than this. This is the push up that broke this structure that we needed to begin looking to buys. Now we're beginning to kind of see this formality play out. I drew this zone right here because price broke up and never retested this area. So I knew that later we're going to get an ideal setup within this area. So now we can go from the 10 hour to the 5 hour because we're looking at double the amount of data. So now looking at double, now the picture is becoming a little bit more clear on what's going on within this area. Now, boom, we can begin to see, okay, boom, we didn't get that retest. We came back down. We didn't reject right around here. We came back up here to this previous area of structure where we have some form of a lower low. And you can look right here and see it clear as day, right? Like right around here, we have this area of a lower low that we made before we dropped down low. Price elite bounced into the zone, came back, and boom. And again, this is just a 5-hour time frame. This is where we are within the move. From the 10-hour to the 5-hour, the data is pretty much similar because we're only looking at double the amount of data. We want to be able to just take our time and mitigate lower and lower. Now, the whole gist of it is this, right? Now we're going to begin to go down to our entry time frame, right? We're setting up to go to our entry time frame, right? Now we can notice right around here that boom, we got a couple things going on. Price kind of came down to the lowest point right around here, which is again we'll say the 160 flat area or the 159 flat. Boom, price came back to this area and found support and began to push up. We did not yet engulf this area. So this is the area that we kind of want to look out for our entry. And the reason being is because we came down, we got a retest. We can see the rejections of the data. And again, this is lining up the entry. This is just lining up the details. So now we're going to go from the 5-hour to the 2-hour. We're going to look at double the amount of data. You always want to take your time and go down lower so that way you can understand where you are within the process. Now, I may have went too low here. Let me see. Oh, I don't know if price is going to let me get that sweet justice. Oh, it did. Perfect. So now that we're looking at double the amount of data, keep in mind, I already drew my line on the structure that I need. So now that I know that I need to break this from this area because I'm so low and I already have this structure drawn for me from the higher time frame, what I'm going to do now is overlap it with structure. Keep in mind, market structure is going to be the main bread and butter that's going to guide you through these markets so that way you can see. And that's basically my big thing that I use is market structure, market structure, market structure. So now we're going to overlap the data a little bit, right? Just so we can see where we are within this trend, right? So we can see that we have a lot of sporadic data as far as for the lower highs being maintained on this 2-hour, right? But then we notice that we came down here, right? And now we're looking for something of an area of significance, right? We're going to kind of delete the higher and just leave this lower that I drew. So now that we have an area of understanding on what we're looking for our setup. Now, keep in mind, this is the same area that I drew on the 5-hour, but now I want you to notice this. We come down lower, right? Candlestick analysis, right? We come down lower. Now we're looking at simple data. Buyers took over right here. I'm going to make this line red, so I'll make this line black because this is where it starts at. And once you go black, you never go back. You feel me? So right around here, buyers took over right around here. You can see that we came down, we took 2 candles to engulf, and then we caught our retest. If you look what our retest is at, again, entry criteria is, boom, I'll drop this QP right around here. Again, abusing the hell out of these QPs because I really want to kind of make sure that the foundation is there on where I am within structure. Not only that, but if I click my gear icon and I go down a little bit lower, right? We're going to drop that here. We're going to go from the 2-hour to the 1-hour. Keep in mind, the 1-hour is the lowest time frame that you want to do your analysis on, so that way you can see where you are within structure. After that, it's all about entries. So now we come down lower, and now we can kind of see the details that we go. Remember, once you go black, you never go back. So watch this. Now, this is the part that we have a great setup kind of coming into criteria, right? Not only did we have price kind of respect 3 QPs, but check this out. Look at the structure. Look at the details, right? Now we come down lower to this 1-hour time frame. We can see the move within the move, right? You see how price came. We're breaking, we're retesting, we're breaking, we're retesting. Boom. Then we come down here. Again, buyers has to take over the area for you to kind of be able to see this move come into flourishing. I'm going to put a box around it right around here because, boom, it wasn't until right around, oh, hold on. Where's the box at? It wasn't until right around here where I'll make it in green because once this area passes, we're good. Once buyers took over right here, check this out. We took over and then we got our retest. So now we can begin to look at where we are within structure. And then ideally, all we need for this move to kind of play out is boom. We need this area right here to be broken. And then on top of that, because we haven't went lower than the previous low, we just need this area to be maintained. So now we could begin to set up a trade ideal because, hey, we have a potential transition of trend setting up right around here. Buyers took over. We have the zone right here that price is respecting. We know where we are. We're at the fib level playing off from the higher time frame. Let's go back to the 5-hour. Let's look at it all in flourishing, right? And now we're beginning to see the setup come into T, right? Cool. Now we're going to go to our entry time frames. Now, if you're watching this correctly, keep in mind, you want to do a lot of back testing to ensure and make sure that your time frame correlation is on point. That means taking your time and going from the top all the way down to the lower time frame, and it's making sure that you understand where you are. If you watch this video over and over again, you should be able to kind of get it spot on and begin to build a profitable entry strategy. But allow me to continue. What we're going to go ahead and cover is your entry time frames. These are your lower time frames. This is anywhere from the 45-minute to the 1 minute. And basically what you're looking for is you're looking for candle entry confirmation. You're doing more candlestick analysis. You're doing your market structure, your zones, and you're doing counter trend lines to make sure that the counter trend on the lower time frames is completely ended. So that way you can ride the trend the correct way. Before I kind of get into the lower time frames, I want to just get us caught up because we went over a lot. So lastly, we last left on the 5-hour time frame. This is where we, again, saw the break that needed to happen so we could look for our setup. And then we came back and pulled back into this area that we didn't get a retest. We then went to the 2-hour time frame, where on here, we went to the 2-hour time frame, where we began to see the trend from the higher high that was made, and we began to see the counter trend that was being maintained, going lower and lower. We then went to the 1 hour, where we marked off the area on where buyers took over at, so that way we could see. And essentially what you're doing is you're just following the trend lower and lower as you go. You can see on this 1 hour, I have my 1 hour market structure from my most recent high point all the way down to my low point, right? And again, all you're doing is you're just drawing market structure, and it's picking up and it's labeling these areas with eclipses that are market structure areas. So you can see like right here, check this out. I know where I am within the bigger picture, but because I'm on the 1 hour, just check it out. Boom. You can see here, we got a break, we got a retest. You can see here, same thing right here. We got a break, we got a retest, and same thing. So what do you think is going to need to happen when we break this structure right here? We're going to need a break and a retest. So now we're going to go to our lower time frames, where we can show you how you spot the optimal entry doing the same thing. Alrighty, so here we go on our 1 hour time frame, and now we're going to look potentially lower. So 1 hour over here, now we're moving over here to our right-hand side for our lower time frame. Now, keep in mind, on your lower time frame, what you're really going to be fixated and focus on is, again, this market structure, zones, kind of popping out the optimal entry and candlestick pattern. So now everything from your 45-minute and below is solely for entry purposes, so that way you could grind and have the criteria kind of going. So now we already can see where the downtrend kind of laid off at, and we can kind of see where we are within structure. Keep in mind, you should have some of your major QPs plotted. Not essentially all of them, but just some of them, just so that way you know where you are within structure and you know how you're navigating, right? So we can see we got like 160, we can see we got like 160, 159, and then most importantly, you can see that we have 162 up here, right? We can see the whole trend of structure. Now, keep in mind, this box is where we engulfed on the 1 hour time frame. So now going back on the 45-minute, now, anytime that you go lower and lower and lower on this time frame and on this basis, you're just basically setting yourself up to get that better optimal entry. Now, notice that I'm going down here to the 20-minute, and now we're seeing more details. We're still kind of respecting that downtrend, but now the whole point of this is to figure out where does the trend stop, and what are the candlestick data showing us? What is the supply and demand zone showing us as far as for retest, and can we squeeze out more potential data out of this? You can see now that I've worked my way from the 45-minute to the 10, and the trend is essentially the same, but now we have a new lower high that's right around here, and this is going to be better for risk to reward. Remember, in this overall move, we're getting tighter and tighter to the bottom. So the quicker we can spot the transition of trend, the easier we can be to find a move. And now on this 10-minute time frame, which I like how this 10-minute looks, from ideally right here in this area where we came down and we came up. Just give me a second. I'm going to change the colors. Now we have new market structure to apply to this overall area. And we can see that we had a transition of trend somewhere right around here. Keep in mind, right? Keep in mind, it's all about market structure at the end of the day, and it's all about these lower time frame zones. Keep in mind, a twist that you can add into it, like I'll make it in white so that way it kind of pops out a little bit. A little twist that you can add, as I said, is some counter trend lines, because normally with the counter trend line, once the counter trend line wave is done and it breaks and retests, you can normally line that up for entry. And in this situation with the counter trend line, we have a touch point of here, right? Because there's this push down that broke, then we came back and got the retest, and then boom. So we can already see the counter trend line for what it is right around here. Now keep in mind 3 touches is going to kind of be ideal here, right? So we got, let's kind of jump out these 3 touches. We have one here. That's one. We have another one here. So remember, with these counter trend lines, you really just need a point A and point B. Let's kind of delete this so that way we can focus on the lower time frame data. And now we have our third touch, somewhere like around here. I chose white, but I don't really like white too much. Let me kind of pick a better spicy color that's going to really jump out. Remember, when you're doing this, you want to use colors that are going to kind of jump out. They're going to kind of show you the details that you need to kind of see. So I like what I had going on with red, so we're going to continue going down. We're going to look at double the amount of data, and I think this is as low as we're going to go for right now because it makes the most sense, right? So now, ideally, you would go to the 10 from the 10 minute to the 5 minute because you're looking at double the amount of data. And now, and looking at double the amount of data, you see I have the trend line, everything's kind of going up. Now watch this. Now we have new lower time frame zones, right? And you're using your supply and demand as support and resistance as you're going downwards. And these are some ideal zones that you can make in black, right? And notice how we're getting a lot of rejection and sellers are still kind of maintaining the overall area. Everywhere that I do these little pullbacks to, we're kind of looking good. But notice right around down here that we have a break and we have a retest. This is perfect for what we need to get that optimal entry that I was talking about. So what we're going to do is we're going to redraw our structure. We're going to make it a little bit more neater to fit this time frame. And ideally, the 5 minute time frame is looking super solid for our entry. So now we're going to show you how you can go about taking that entry with the best risk to reward possible. We came down, we broke back up, we came down, we broke back up. Same thing that I was saying before, nothing different. But now, boom, we came, we had a nothing but rejection. Boom, we came back. Boom, we retested. Boom. Now we started moving off of structure. Notice that there was a key area that we started moving off of structure from within. And again, these are all areas that it's super important to understand and correlate to. And this is going to be the area right here. So remember, this box signifies the 1 hour. So now within this 1 hour, we have where price needs to engulf at, where we need to see the data. Now we come down here, we see the lower time frame kind of getting to work. Lower highs, lower lows, lower highs, lower lows, lower lows, lower highs. This area right here, where I'm making this eclipse at, this is the last market structure area within here. Boom. We broke this area. Now we retest. So now as a trader, you should be having your technicalities kind of placed out. And you can see right around here that we would have the 750 QP. That price went ahead and broke, and then we retested. So now what are we looking for optimal entry? Keep in mind, right around here, where I'm doing this at is we broke this area on the lower time frames. We came and pushed up, and now we're getting that retest, right? That retest is what's super important. So then we broke, retest, boom. After this candle right here got engulfed, boom, with this candle, you could have bought on this QP right around here. Long position, set up, stop loss underneath this zone for a cool 20 second. Look, the market structure low, which is right down here. Stop loss basically at this low point. We have the stop loss underneath this zone, which is the main thing. We rolled the QP. Let's go ahead and plot off our entry. And now we're going to correlate this and see how it looks. Right? Boom, we entered. Remember, buyers took over right here. And if you understand, if you're trying to figure out what area I'm talking about for buyers taking over, this seller's candle right here after the retest, this is the last seller's candle within this area. But once buyers took over this little area right here, we're good. I'll also make this in a pretty color, like yellow or orange. Nah. Or blue. Nah, purple. Nah, pink. I'm getting there. Orange. I like orange. Cool. Orange. So now we got the long tool set up. So now we got where we engulfed at. Now we're going to slowly backtrack for risk to reward. So keep in mind, riding the wave just to here is just for 60 pips. And notice you could keep on plotting QPs if you want. Now we got to reverse engineer a trade and see where we are based on where we entered. And if you entered correctly, keep in mind, best risk to reward. Now we're going to go back up to our 10 minute because our 10 minute was the last time frame that we went ahead and looked at this. So now by the time the 10 minute has developed, you would have noticed that, hey, not only did we break minor structure right around down here, but now we're running into the third touch of the trend line. You could have chose to A, exit the trade here because you're riding the trade from zone to zone, or B, if you have your trading plan set up, you could have followed your plan and got your ideal pips for your target for the day. Or whether if you're going to be that daily, that day trader that you're all cooked up that you're trying to be, you could have rode the wave to a higher time frame zone where you correlated back up into your 1 hour. You could have rode it up here into a resistance, because remember, you're looking left to help you get right, and boom. These are how you get the best possible entries for your reward. Now let's backtrack to the 5 hour. Would have came back to the 5 hour, you would have said, well, damn, I'm spot on. I caught where the trend ended. Boom, boom, boom. Now you done got the same data that you needed. Now we done engulfed here. And now we're riding the wave all the way up. And this is just how the trade went from a scalp to a day trader to a swing trader. So in all reality, it does matter. And you can see that this trade was one of them ones that pushed where it could have been a good reward. But you know what I'm saying? Who's going to really hold the trade for that long unless you're a swing trader? But I just want to show you how you can get the optimal entry. And again, that time frame that really did it for us was 5 minutes. So just keep in mind on what I did. I did some counter trend lines. I did some zones. I figured out where structure ended, and I paid attention to candlestick analysis. Candlestick analysis is going to be super important. If you haven't saw my video on candlestick analysis and market structure, there'll be a link in the bio below. Go ahead and give it a watch so that way you can correlate it. Now, this is how you get the most optimal entry. Keep in mind, we entered here near the 750 QP. We entered on a quarter point. Keep in mind, we have our stop loss below market structure areas, and we were able to ride this move and maximize it. And this is what it's all about, getting that good ideal entry. In the beginning of this video, I showed you several entries. These were kind of like my examples, and now I kind of wanted to take this next section of this video to kind of go over them and show you them, because I think they're important to kind of highlight on how I went about them. So you can see I also took some buys, but now we're going to kind of pay attention real quick right here. So going on this beautiful 5 minute time frame, I have a bit of data on here, but don't mind. Let me just delete some of the QPs, because QPs can kind of fluster how you see things, and we don't need that right now. All right, so cool. What we're going to start with is, boom, right around here. So I want you guys to just pay attention to structure alone. Right down here, you can see I have a counter trend line that I did. You can see I have my eclipses, because my eclipses signify where we transition from trend. You can see here that we broke and that we retest. So me using time frame correlation from the 3 hour, you can see I have a potential higher low area right here. Going to that 1 hour, you can see my projection for my stop loss was a little bit more bigger than necessary, but 9 times out of 10, it was probably to this zone down here. You can see that, hey, structure is in an uptrend, which is correct. You can see that, hey, we are at a higher low area. This is correct. Now, boom, showing you for the optimal entry. You can see that I also flowed with price action. I entered at 190, 197, which is right around here. You can see my crosshairs is, and boom. Now, what probably made me take that trade is there was probably a lower time frame transition that we needed. You can see right here that, boom, 9 times out of 10, this little counter trend that we made right here, where we was making some lower highs and lower lows. You can see this is the low. You can see I waited for us to push up. We ended up breaking this area right here. Going down to the 5 minute, I could probably explain it a little bit more better. You can see that by the time that the 5 minute already developed, I had everything I needed, because we already transitioned from this point and broke, and this was a retest, and I literally flowed with the move. This is how I got 200 pips. And again, my stop loss was a little bit more bigger at first, but boom, you can see that. 9 times out of 10, every entry that I'm showing you is either going to be a higher low or a continuance of that. So you can see I rode the wave all the way up there. This was a trade that was taken on Monday. So now we're going to go to the next trade I caught on Tuesday. Tuesday, the higher low was already created. So I waited for us to break a area where we have a break and retest. Notice that I have a zone within a zone here for a hotspot area. You can literally see on this time frame, which is my 20 minute, which is one of my entry time frames, I have what sets up to be a higher low, and you could see a zone within you could see a long tool within a long tool, which means I scaled in on this entry 9 times out of 10, and boom, you can see I got a pullback, an area of a QP right here. I waited for rejection, stop loss was underneath this area right here to my left, and rode the wave up for a cool 96 pips. Now we have the same move again on Wednesday, same entry. Higher high was formed. We pulled back. We made what appeared to be a higher low, following the trend going upwards. You can see I marked off 9 times out of 10 here, where buyers took over on these lower time frames. Looking for it so I can show it to you. But I enter on the 1 minute, so y'all guys don't judge me. It's pretty lit down there. But just to kind of give you like a full taste of what I go about doing. Now, this trade, we were in a bit of a range and I knew that. So I really marked off my demand and my supply area so I can get in properly. You can see, boom, that I broke. And look where I entered at. I entered near a major QP. This doesn't happen by mistake, guys. You can see that right around here along the major. I probably entered off of this retest right here and literally floated the move. This move consolidated. Now, the wick gave us a total, but even still here, I could have still caught my trading plan for at least 50 to 60 pips, which I'm pretty sure that I did. And then lastly, the last move down here, which let's go back to the 1 hour time frame real quickly. You can see that the market dropped all of what? After it did that move up here, we dropped all of Thursday. And this move basically came in Thursday night going into Friday to where, again, we broke down here. Now, on this 1 hour time frame, this is where I would have entered, but this is not where I entered at. I entered like around 190, 300, which is a little bit more down here, like around 193, 33. And I'll show you why within a second. Let me go to that 3 minute time frame. No, I didn't enter off the 3 minute, but I want to show you off this 3 minute structure for a better risk to reward ratio. Matter of fact, I'll really show you the real entry time frame, which is the 1 minute. I'll be trying to give out all my gems, but god damn, I got y'all. I love y'all that much. So boom, the optimal entry was right around here. Now, you can see here that I entered here and I entered multiple positions. Again, I'll show y'all my sway. I entered multiple positions buying right here because one, the downtrend is completely ended. The uptrend is going. And notice that we're moving off of these zones. If there was areas that I could draw zones at, which right around here, and notice that break, retest, right here, same thing, break, retest. The market is definitely showing that it's trending upwards, break, retest. So now that I notice, I can either draw these zones from the left-hand side, which is ideal for me. You got to look left to get right. Boom, boom, boom. So notice that everywhere from the left, we're breaking and we're retesting it. And we're also moving in the area direction of trend. Now, we were already above the 250 QP here. So what I did was I used this move as an area of support overall. And boom. After we did that, stop losses is basically down here to this structure area. Boom, boom, boom. And I literally flowed with the move kind of going on up. This move was an easy move to kind of take. I maximized really for like around 90 something pips, which is somewhere like around here. So once I kind of hit this much, I was like, damn, I'm way in profit. I didn't correlate it to where I am on the higher time frame and notice that, hey, this move is kind of up here. Now, you see this little white line right here. This is the area of retest that I was looking out for right on here because we broke this area right here where I drew this zone at. And we didn't get a retest. I was anticipating market to kind of come up here and then come back down to make another move right here, which we're doing now. And that's what made me kind of get out at 90 pips because I saw we were approaching this target zone area and I didn't want to wait. There you go. You got my whole top-down analysis. Watch this video over and over and take great solid notes. Keep in mind, right? It takes some time to get top-down analysis correctly. And if you do this correctly, you'll get these sniper entries just like me and you'll be able to make the bag just like me. Keep in mind, right? Top-down analysis takes some time to do, but again, if done correctly, you can get the bag as well. Now, notice here, again, on my sway that I was able to profit over $5,000, and this is just on Thursday alone. This is just on Thursday. I had a phenomenal week. We can take it back as far as for all the way to the beginning of the week, which is on the 8th. And from the 8th until now, you can see I made over $18,000 for the week. So if you want to make $18,000 or potentially more using this strategy, just go ahead and take your time with it, flow with it, and definitely just make sure that you understand where you are within market structure. Again, if you want to join my wait list, I have something coming up, something big, something major, something that's been very undone, and my gift back to you guys as far as for education goes. Hit the link in my bio and join my wait list and get all the updates on what's to come. And at the end of the day, I hope you guys enjoyed this video. Don't forget to like, comment, and subscribe, and I'll see you guys in the next one. Deuces.